The price of Bitcoin reached an all-time high of almost $20,000 this week, 3 years after the cryptocurrency last jumped to that level. On Monday, the value of one Bitcoin surged to $19,850, although it later fell back to the $19,200 level. Bitcoin was created in 2008 as a decentralized currency, meaning that it's not issued, managed, nor processed in transactions by a bank. It relies on a peer-to-peer network where transaction data is distributed, then secured, held by advocates as the future of money and borderless transactions, but on the other hand, questioned by skeptics on whether it's legitimate or just a get-rich-quick scheme enabling illicit movement of money. The debate still has not been settled after more than a decade. But what both sides can't deny is that the appetite for cryptocurrencies has been shooting up globally, spiking during November with more institutional investors snapping them up. We discuss these developments today with Charles Edwards, founder of Capriol Investments, and Melvin Matthews, board advisor to Orbit MI, joining us from Germany and New York. Thank you so much for joining us. Let's start with you, Charles. So first of all, welcome. Thank you so much for joining us today. Bitcoin...
Thank you for having me.
Well, Bitcoin, as you saw this week, it's reached record levels unseen since December 2017. And what really led to this rally amid the COVID-19 pandemic? And of course, back in 2018, we saw Bitcoin reach new heights and then it fell again. And do you think the same thing will happen this time around? I mean, how do you think we should see this recent rally?
Yeah, good question. So this year, it's really driven by two fundamental aspects, in my opinion. So the first being the fundamental elements of Bitcoin, and the second, the macroeconomic environment. So the first thing to understand with Bitcoin is that it has a programmatic supply model. So over the next 100 years, we know exactly what's going to happen from a monetary policy perspective. And every 4 years, the inflation rate halves. So what that means is that for a given level of demand, there's a bit of a supply shock, which causes an upward pressure in price. So that's the first thing. And we're seeing, I suppose, that in reality with companies like Square and Square and Grayscale this year. That at the moment, they're buying up more than 4 times as much Bitcoin that is being mined any given day. So that's just 2 companies, and that just illustrates the scale of this. At the same time, for much of 2020, Bitcoin on a fundamental level has been undervalued. So there's many ways to assess that value. I'm a big fan of the Bitcoin energy value, which maps the joules of energy spent in mining to Bitcoin. And it's been undervalued. So we're kind of seeing a reversion to the mean. On a macroeconomic scale, we've had extreme monetary printing, so 20 to 25% increase in the money supply in the US. And that is causing investors to look for risk-on assets. So you've seen the stock market rally, and for assets which protect value over time, such as Bitcoin. So you combine those two, and it's a sort of a perfect storm for price appreciation of Bitcoin. And I think it's just beginning, essentially. And the other factor is the demand upside potential. So less than 1% of the world today owns Bitcoin. So every incremental increase in that for the given level of dropping supply results in, again, further upward price pressure on the price of Bitcoin.
Right, so Charles, you just said that you think Bitcoin is still undervalued, but of course some say maybe this is all a bubble. And Melvin, there has been so much talk over this over the years and on whether Bitcoin's moment has arrived every time it reached new heights. But really, it still hasn't stabilized as a currency, though. We see its value just continuing to shoot up, and now people are asking whether they should buy gold or Bitcoin. What's your answer to this?
Thank you, Seong, and lovely to see you again. Some say that though it looks like the moment has arrived for Bitcoin, that is not really the case. And the reason is people are still not using it for day-to-day transactions, such as paying for routine shopping. But on the contrary, they appear to be hoarding it for future rise in value. And it has already achieved significant value by substantially rising over the last few years. Now, among the reasons people prefer investing in Bitcoin or other cryptocurrencies is the fact that it does not seem to be prone to fiscal measures such as quantitative easing, which may temporarily increase the supply of money in the short term, but results in inflation, devaluation, etc. over time, greatly reducing the purchasing power of traditional money that we hold. On the question of should we buy gold or Bitcoin, we need to perhaps take a step back and evaluate the inherent nature of both gold and Bitcoin for investment purposes. there are quite a few similarities that gold and Bitcoin share. Firstly, both gold and Bitcoin are enormously liquid in their markets, where traditional money can be exchanged for them quite easily in most parts of the world. Secondly, gold is not just used for making jewelry, it also has applications in electronics, dentistry, etc. And while Bitcoin is used as a cryptocurrency, its underlying technology, blockchain, is now finding applications in many areas, from digital transactions to digital contracts. Thirdly, both Bitcoin and gold are not issued by a central bank or the federal government, and therefore not really dependent on them. Finally, they are both in limited supply, so there is only a certain amount to go around, like Charles alluded to. In the case of Bitcoin, only 21 million tokens will ever exist, which is how it was created by the mysterious creator Satoshi Nakamoto. And similarly, although gold is still mined, the amount we get is so low that demand always outstrips the supply. On the question of investing, I would suggest investing in both if you have the money and appetite for risk. So you end up with a diversified portfolio. Bitcoin, like other cryptocurrencies, has an advantage over gold. The fact that it is decentralized and not controlled by anybody in particular means that there is virtually no transaction fees. But then it also mostly is unregulated, and unlike gold, which has a well-established system for trading and tracking it, Bitcoin infrastructure is not exactly considered safe by the larger public. In past crypto exchange outages like the Mt. Gox disaster resulted in 460 million worth of investor money disappearing.
Right, and Melvin, it looks like
as far as volatility.
So Melvin, it looks like there's definitely been a lot of institutional interest in Bitcoin very recently. So why would you say there is this sudden interest and the dramatic increase of holdings by investors?
Now that's an interesting observation and thing that's going around. Institutions are constantly on the lookout for new avenues for profits. And since Bitcoin is so volatile, institutional investors are increasingly looking for newer ways to invest in it, especially every time there is a price dip in cryptocurrencies. Recent surveys, for example, show institutional investors intend to increase their Bitcoin allocations regardless of short-term dips. And that is because they feel Bitcoin has been around for long enough, which is about a decade, to develop a certain credibility that time brings. Secondly, some believe that regulations for crypto market will improve and become clearer as time goes. And some also believe that the market will eventually become bigger, providing better liquidity, which is a feature that most institutional investors are looking for. Finally, all going well, institutions see the long-term value of cryptocurrencies going up, which is exactly what they want. And these could perhaps be the reasons for increase in holdings by progressive institutions. But all
right. Well, Charles, now more and more retailers and more and more shops seem to be adopting Bitcoin in a way. I mean, Pizza Hut in Venezuela is accepting Bitcoins in exchange for pizzas, and PayPal is allowing more than 300 million customers to use the cryptocurrency. Do you see the potential for Bitcoin to really become an established form of payment in the post-pandemic era? And do you think it should become mainstream?
Yeah, I do. And for all the reasons we've both touched on today, the fundamental value of it, I think that is increasing the demand for Bitcoin, and more people want to store their wealth in Bitcoin in the long term to protect their assets essentially against erosion from inflation. And obviously, if you have a large portion of your wealth in Bitcoin, you want an easy ability to spend it, on your daily expenses. So I think it's natural progression in it, and we're already seeing a number of ways to do that today. There's probably three key ways I can think of right now, which are very popular. So you have the payment platforms. You've got things like 10x, Fold, Crypto.com, and now obviously PayPal and Square, which allow you to get a card and to basically spend your Bitcoin or any other crypto at the payment terminal, and that converts it instantly to fiat. So it's a conversion process which does use a fiat on-ramp at the point of payment. They're very popular. It's not pure crypto, obviously, from the core sense. It does have that conversion back to fiat, but it does allow you to spend Bitcoin anywhere in the world using sort of Visa and MasterCard payment networks at negligible cost, and you can live off Bitcoin if you want today. So go to a cafe or restaurant or what have you to buy your goods. The other sort of more traditional sort of fully crypto-based approach is the sort of Lightning Network, which is a layer 2 protocol on Bitcoin. And that allows aggregation of multiple transactions into a single transaction. And what that means from a simplified point of view is that you can transact very quickly and efficiently at super low cost. So you could buy a coffee for a couple of cents effectively. And then the final other way it could be used or spent in day to day is using another cryptocurrency as, there's 2,000, 3,000 odd other cryptocurrencies. Perhaps a couple of them will become a payment intermediary in the long term. But for today, the main method is the fiat conversion with a platform such as a payment provider like PayPal or Square, or another application like Fold or Crypto.com.
But Charles, there are still concerns over the legitimacy or the security of using cryptocurrencies like Bitcoin, as we continue to hear reports of hacking attempts and regimes like North Korea and possibly criminal networks using the cryptocurrency. Are cryptocurrencies right now to be trusted?
I think so. If you look at it from the broader picture, there's nothing intrinsically bad about Bitcoin. It's simply a payment protocol network, all in code, open source, anyone can view it, and it is completely secure, and every transaction can be validated in time. So the issues that have arisen, and you're right, there have been scams, there have been hacks used for illicit activities in the past. All of those have been through third-party applications. So the Bitcoin core network has never been corrupted to date. And the other thing to consider is that Bitcoin is a brand new asset, a brand new industry really, and it's only been around 10 years. And any industry which is new by definition has no oversight or regulation. So what that means is, on the one hand, you've got Bitcoin as a payment network, and in its early years it had no oversight. So the opportunity for criminal activity and misuse of that is very high because no one's watching, basically. But over time, as we've talked about, it's changing. There's a lot more regulations coming in and oversight, which limit that. And the analysis that has been done on the network indicates that only about 1% of the transactions in 2019 were from illegitimate activities. Finally, the thing to remember is that Bitcoin is actually terrible for criminal activity because every transaction can be fully traced across the blockchain through all time. So even if you did something bad 5 years ago, it can be traced in 5 years' time. So if you're any large-scale criminal or doing anything on an ongoing basis, it's just a matter of time until you're caught. So intrinsically, Bitcoin, I think, offers a safer opportunity for people to transact because it can be fully traced, and with time, governments will catch up to that and be able to monitor suspicious activities and support the use of it, I think.
Now, talking about regulation here, Melvin, so central banks and governments all around the world, they seem to have initially been at loss on what to do with cryptocurrencies. How do you think they should approach this policy blind spot? And do you think there's a way of designing a regulatory framework that really works?
Well, governments have power because they control the supply of money. And that is not something they are willing or ready to give up that easily. Now, what has worked in favor for cryptocurrencies so far is the fact that the volume is quite low in comparison to the volumes that fiat currencies, globally turn over. Secondly, as mentioned earlier, at the moment, people are buying to hold as an asset and not to use for their daily transactions. So it's not really impacting governments so much. Thirdly, cryptocurrencies are designed to exist without any intervention by any government. Hence, it will continue to exist or coexist and flourish if governments don't interfere. Now, barring a few governments, most governments have not seen cryptocurrencies as a significant threat to the current status quo or existing fiat currencies. Hence, so far, government motivation for regulation has been only to curtail illegal activities such as money laundering or for trafficking, illegal drugs, weapons, payment for smuggling or terrorism-based transactions, etc., like Charles mentioned. Now, some of the most progressive countries that have hindered the growth and use of cryptocurrencies are basically China and India, for example, that have banned its citizens or advised its citizens not to dabble in cryptocurrencies. And this is despite the fact that until recently, 70 to 80% of all Bitcoin mining globally happened in China. Last year, in fact, the Chinese government took the step to ban mining as well. Now, some of the most progressive countries, on the other hand, that have not hindered the growth and use of cryptocurrencies in the Asia-Pacific region is Japan, South Korea, Australia, Singapore, for example. And while in the Western world, there's Canada, the United Kingdom, Switzerland, France, the United States, which are examples of countries which are perhaps which we can classify as friendly to cryptocurrencies, although regulations seem to be developing there as well.
And it looks like more and more countries are trying to find ways to really work with cryptocurrencies, as they do keep spiking in price, and it's not something that's going to go away, obviously. Well, I'm afraid this is where we're going to have to end the discussion today. That was Melvin Matthews joining us from New York, and Charles Edwards joining us from Germany. Thank you both very much for your time today.
Thank you, Sio.
Thank you.
And to our viewers, thank you as always for watching. We hope you have a lovely day or evening wherever you are. Goodbye.